Okay, good morning, folks, and welcome to Members Stock Chart Request. This is where we review the symbols that our members submit for us to review on video. We're going to begin with the events that are unfolding in the markets this morning in the pre-market. These are the Dow Jones E-mini futures, and you could see that we're down slightly. When I went to bed last night, we were up about 70, 71 points. But we have since pulled back and gone negative. So that's a bit of a reversal day. So what we're going to be looking for is resistance at the highs of last evening at 26,684. That's going to be our number. Do we break out above it? And members, we're going to talk about strategy, about how we approach shorting a market which, despite being down in the pre-market ever slightly, is still extremely overbought. So it's certainly still a short, but the key is no emotion. We need to show patience, and we'll talk more strategy after we go through the charts that you have requested. The dollar, it's trading slightly higher. It's holding a breakout point. We have a lot of economic data coming out this week. We have the FOMC meeting. We have ADP jobs report. That's on the 31st. And we also have the jobs data, the government numbers, on Friday. So while not many reports to be released, they are significant. Also this week, we have Facebook, U.S. Steel, of which we're bullish on, and Microsoft reporting on the 31st. Then on the 1st, we have Alibaba and Apple. Now, three of these names are triple Q names, which are very overbought, and two of them are down names. So we would like to see these names get extended prior to earnings. Then we could look to open a short position in either the Dow Jones, the triple Qs, the SPYs, or the SMH prior to an earnings release. Let's get to your charts you requested. The first chart up, KEM Chemic Corp, weekly chart. We broke out 2 weeks ago above resistance. Last week, we retested the breakout point and it held. I'm not sure what happened here, what the news event was, but you can be rest assured that it traumatized everybody that bought within this range. So you're going to have some overhead resistance slightly above. So I see that we could probably rally up to 20, let's call it $25 per share. After that, $27.35. I'd be a buyer. As early as today, I would scratch the itch, open up a small position with a stop right below the support level here at, let's call it 19. Then add more on strength. Once we hit 24.64 close there, add a bit more. Then add more aggressively above 27.35. Because once we get above that level, this is now a quarterly chart, we're not going to have resistance above the 27.35 level until 34.74. So this chart is setting up very nicely. Love the higher low here. So it looks as though these shares longer term want to move higher. Daily chart, we are in a triangle formation. You could buy above this upper band of resistance, but then you hit immediately resistance at $20.11. I would buy it on a close above $20.11. That would be a good risk to reward entry point with a stop right below Friday's closing high. RSI moving up, Stokes looking up, bullish on the chart. Serena Pharmaceuticals weekly chart. All right, so a beautiful base here. Here's our pivot point. After putting in this double bottom setup, we broke out above that pivot point back in October, and we've had a nice run ever since. Now we are at resistance, so the discipline here is that we can't buy the shares. It's a little bit late. When would we buy the shares? On a close above $10.24. We have a nice double bottom setup on RSI. Stokes are rising. What concerns me here is the topping action, and I'll attribute this pressure, the selling pressure last week off the highs of the week, to overhead supply. Buyers back here looking to get their money back. Daily chart. All right, so we got extended last week. We sold off. I think what's going to happen here is that we're going to pull back to retest one of two or both of these support levels. One here at, let's call it, 972 per share. We'll probably overshoot, retest this lower band of support. Watch for a bullish key reversal off of that support level. You could buy off of this lower band of support. Just use a stop right below it on a closing basis. Volume, while above average, has been declining. So I think the best risk-reward entry point here is allow for a pullback, then a bullish key reversal, then open up your position. CRB, Corbus Pharmaceutical Holdings. This is a daily chart. Let's go to a weekly chart first. Get that higher level view. We broke out last week, but we saw selling pressure trying to take it back down below support, but it held. So when you see topping action like this, after you break out, more than likely we're going to retest the breakout point because there are non-believers out there. They're not believing that this rally is for real. But you have RSI breaking out, Stokes are breaking out. It's for real. And the institutions are telling you so with volume. Daily chart. We are in a nice pennant formation. This could be bought with a stop right below support. Scratch the itch, then add more on a breakout above this upper band of resistance at, let's call it, on a close above 1405. Volume was a bit light on Friday. So the chart is looking good here for HCLP. So the last two I have up are both biotech ETFs, the XBI and the BIB. So I'm going to go over the weekly chart of the IBB, and then I'm going to go over the daily chart of the XBI because they tell slightly different stories. But by and large, they're trading in the same direction, which is up. Each broke out last week, and significantly. I'm extremely bullish on the biotech names. I think that if we put in a new weekly high, you can consider opening a position, but I would warn about this. Going to the daily chart of the XBI, we are very overbought, very short term. So if we get a sideways consolidation, that'll alleviate this overbought condition, meaning relative to its third standard deviation Bollinger Band. Allow for a sideways consolidation or a pullback, then buy the new weekly high. Or even better, if we get a dramatic pullback, assuming that the market pulls back sometime this week, and we get a retest of the breakout point, that would be an outstanding entry point for the biotech names. I'm very bullish here. Members, let's segue into a brief update on how we plan to short the stock market. Okay, members, let's talk about our strategy and let's talk about shorting extreme overbought stocks, commodities, currencies, whatever. It doesn't matter. It's all the same. There are certain knowns, and the knowns is that in this case here, the Dow Jones Industrial Average is extremely vulnerable to a sell-off. Now, at current, we are down in the pre-market, and while that might look good for our short thesis, we need to remember what the probabilities are here, right? The probability is that the trend will continue, especially since overnight we put in a new weekly high. We need to respect that high. So I need to assume going into the trade this morning that this pullback is going to be bought. And by 10:30, 11 o'clock, you'll see the Dow Jones trading higher on the day. Now, will I short into that strength? Not if we close out the first hour of trade higher on the day. Why? It's because from vast experience with trading extreme oversold and extreme overbought stocks, the probability of an intraday reversal in the first hour and in the last hour vastly outweigh an intraday reversal with every other hour combined. It's the first and last hours that are the most important to us, because in the first hour, we'll know, let's go to a 15-minute chart, we'll know if we're able to rally off the lows of the period, then we pull back, and then we rally back. Do we put in a higher high or do we put in a lower high? If we put in a lower high and then take out the day's lows, well then, that's a short signal. Now, if we rally off the lows of the day, the first hour of the day, and we remain green until 3 o'clock Eastern Standard Time, I would be looking for that 3 o'clock trade. In fact, I would honestly be looking at around 2 o'clock to see whether or not there are any divergences that I could point out. And that 3 o'clock hour, I would be really looking for whether or not we're seeing selling move in, selling volume moving in and taking the market off the highs of the day. And will we close with a bearish key reversal? So long story short, don't do anything between 9:30 and 3 p.m. Eastern Standard Time. The only exception to that rule is if the Dow futures were going to rally at the open, triple digits up and into, on a 15, 30-minute chart, up and into RSI above 85.90 and trading above the third standard deviation Bollinger Band. Then I would have an edge. Right now, I don't have an edge, with the exception of the daily chart, but we don't know whether or not we're going to see institutional selling and the beginning of a correction until that 3 o'clock hour. Until then, the dumb money is in control. Don't fight it. And I'll talk to you later on today, folks. Be well.